Anyway, let's try and pick out the salient points from those videos, and let's try and do that in a 5-minute video today. I may go on, but let's try it within 5 minutes. Prepare an effective budget and monitor it. Try and monitor it on a monthly basis. This applies to anyone. This is not just people living overseas. So monitor it on a monthly or a quarterly basis. You know, that's the minimum. You should be doing it on a quarterly basis. And if you're a beginner, more frequently than that. And this is important in times of higher inflation. Ideally, have a savings target. You know, that's easier said than done. But if you are taking out a portion to save before you start allocating your household and leisure expenses and your entertainment and all of that, it's a good idea. That money will grow, that'll accumulate, and it'll help you towards future life goals like retirement. And think about, you know, dividing it between the currencies if you are living in one country and working in another. Another point, use your allowances and understand what you are entitled to in your countries of tax, residence and citizenship. Let me give you a couple of examples. There are many potential examples here. Let me just give you something to think about here. If you're a UK citizen and you're living in Brazil as a tax resident on a salary from a company, right? A company in Brazil, you are allowed to use a previdência privada to reduce your taxable income in Brazil. You are also allowed to make up any gaps in your national insurance record in the UK. At the same time, you are not allowed, if you're a non-resident of the UK, you are not allowed to contribute to an ISA, a new ISA. You can move ISAs around, your existing ones, but you can't open a new ISA while you're a non-resident. It's a good idea to review the costs of your UK or your US or your Brazilian banking and trading accounts, wherever you are. And the more countries you've lived in, especially if you've worked in several countries, you may be holding on to assets, bank accounts, you know, investment accounts, trading accounts, whatever, in different countries. And that's quite cumbersome to manage, and it may add up to a lot. If you add all of the administrative costs of these accounts, you might want to consolidate some of them. You may want to close the ones where the fees have changed. I'm thinking of certain examples during the pandemic when certain trading accounts offered free trading. There is no such thing, but that's a topic for another video. They're going to charge you in some way. These trading accounts are not NGOs, all right? But so be careful of that, because those are all chunks coming out of your capital, and you can manage that in a more cost-effective way if you pay a little bit of attention to it and take the necessary action to streamline accordingly. Let's talk about the Brazilian tax return, because this video is all about digital nomads and expats and long-term foreign residents who are either Brazilian tax residents or who are likely to become Brazilian tax residents and may need to plan in advance. Always a good thing. So if you are a Brazilian tax resident, I advise you to use a decent accountant for your first tax return. Even if you think you can do it yourself, I really advise taking advice. And you have to take advice from somebody who is experienced in understanding how overseas income and overseas assets should be declared in Brazil. And then, yeah, go ahead and do it yourself in future years, or continue with the professional that you're using. But it's a good time to get it right the first time to avoid problems in the future. So remember that the Brazilian tax return requires that you declare all assets, both in Brazil and overseas. This catches out many new expats or digital nomads who are either unaware of this requirement or who confuse this with a separate requirement by the central bank, and that's a separate asset declaration for overseas holdings above 1 million. So a lot of people have said, hey, Amit, you know, we don't have $1 million overseas. Well, you don't have to do that central bank declaration, but if you've got, let's say, 100,000 or 200,000 in the UK or US, that needs to go down in the asset declaration in the Brazilian tax return. And staying on the subject of tax, if you're going to invest and or trade Brazilian assets such as equities, options or funds, you need to understand the tax rules first. Yeah, I know it's a bit of homework, but it's worth it to prevent future issues. It's a very different system in Brazil if you compare it to Europe and North America. And if you understand the treatment of capital gains and dividends and exempt and non-exempt funds, you can structure yourself to be very tax efficient. So here's an example. If you sell up to 20,000 Brazilian reals in 1 month, let's say you sell a share, which is 19,000, the total value, it doesn't matter what the profit is. The profit could be 1,000, the profit could be 10,000. You may have more than doubled your money, but that is not taxable because it falls within the monthly sales exemption. And this is very different to, say, the UK, which taxes the annual aggregate realized profit regardless of the value of the annual aggregate sales proceeds. I hope that was clear. In any case, you need to speak to an accountant who will explain it to you in detail. And on a final note, let's talk about appropriate insurance arrangements. If you end up staying in Brazil or anywhere else in LATAM longer than expected, I mean, this happens, right? Things change. Some people plan to stay in Brazil for, let's say, 3 months, and they end up here after more than 10 years. I know someone like that. I know loads of people who've been here for 20 years or more when they were just coming here on a short holiday. But there are a lot of people, let's say digital nomads, who end up liking Brazil, and they're here for a long time, a year, 18 months and beyond, and they have to review their insurance arrangements because sometimes, I mean, if things change, you end up staying longer, your base country of residence could change. It depends on the policy provider, right? But if your base country of residence changes, your insurance policy base may no longer be valid. It's quite a broad subject, so it depends where you're from, where you took out the insurance, but it may be difficult to renew your original insurance policy, especially if you're on a continuous stretch in just one country. So I don't mean you're going from Brazil to Argentina to Peru to Colombia. I mean, if you're in a long stretch, what if you're in Brazil for 12 to 18 months? That'll make you a Brazilian fiscal resident, and it may change the rules of your original policy taken out overseas. In fact, it may be more cost effective to set up a local insurance policy in your current country of residence, and that depends if you are registered in that country with a tax ID or social security number. I say this, with a lot of conviction here, having seen all sorts of things go wrong for foreigners in Brazil and other countries in Latin America. Please do not try and over-economize on the type of insurance policy that you have. And it may be better to take advice to understand the most suitable option based on your health status and your budget. So if you are, let's say, living in Brazil for an extended period, you may wish to consider a monthly health plan, a plano de saúde, or if you're moving regularly within the continent, you may be better off with a pure global travel insurance plan. But you need to take advice and map it all out and work out the custo-beneficio, the cost benefit. Okay, I hope I did that within 5 minutes. I'll find out when it's edited.